Dhananjay Sinha, Head of Strategy and Research at IDFC Securities, joins us on the show. Good morning, Dhananjay. What's the sense that you're getting in when you speak to your clients?
Good morning.
Good morning. What's the sense that you get when you speak to clients? What are you recommending them? Stay invested in the market, exit on rise? What's the sense that you've been talking to them?
So I think people are sort of thinking about the budget. So the constraint that the government has with respect to the budget, given the context that you have a sort of a lackluster performance as far as tax revenues are concerned. So people are talking about how the government will manage its spending and which are the focus areas that they would be talking about, given the context that you also have a sort of a slackening in consumer spending, employment issues, all those things are there. And I think within this, the most critical thing that has been talked about is what happens to the RBI's excess reserves. The Dr. Bimal Jalan committee is expected to place the paper by end of this month, and whether that can provide a certain bandwidth to the government to spend more and stimulate the economy. So that's a very critical thing that people are talking about. And the other context also is the NBFC problem, and people are worried about that, whether this can translate into a contagion. And people think that government should or the regulator should act fast. Such that this problem is contained and you get into a new growth phase. So people are worried about the sustenance. Clearly, if you look at the Nifty earnings, the consensus estimate is fairly high. Over the next 2 years, I think the current estimate is upwards of 25% on average. And over the last 1 year, it has been a decline. So clearly, unless the growth comes back, people are worried about the valuation. Currently, if you look at the Nifty, it's trading about on a trailing basis about 27, 28 times. Last 10-year average is 19 times. So considerably high in the context where earnings are not there. So clearly, people are looking at global cues. There is disquiet on the earnings side, and people at large are somewhat cautious, I would say, at this juncture.
Okay. Well, just before we get back to Dhananjay, I need to mark, Darshan just spotted IRB Infra is now down 11%. There's something that is surely bothering this company, which is beyond the normalcy, because it's not that the other infrastructure stocks are going through this, but IRB Infra is down about 11%. Jet Airways continues to slide lower, 18% lower, and the other usual suspects continue to be under pressure. Reliance Infra out of the FNO ban and sees some fresh short positions, I'm sure, because it's down another 8% today. Dhananjay, good morning. Congratulations on your new role as well, and thanks for joining in and speaking to us, Neeraj here. What did you make of the pullback in the yields yesterday, Dhananjay?
Yeah,
was it largely due to the belief that there could be some surplus transfer, because that is what a newspaper report was saying, or is it due to Mario Draghi's commentary that came in around our market hours yesterday?
Yeah, I think it is more to do with the ECB pronouncement saying that if it requires further stimulus, they would be ready to provide. So I think globally that is something that is happening. And I think that decline in global yields is one factor that has been pulling up the valuations across emerging markets, including India. So I think that is a very critical factor. I think from a RBI reserve standpoint, I think it is still under discussion. So I don't think that is really influencing the market right away. So we'll see how it comes up. And there is a very critical role of that. And I think by the month end, we should be able to hear some news and how it will evolve. And I think that will be pertinent for the budget construct as well.
Dhananjay, if that is the basic premise that the yields might stay lower, would you believe that PSU banks provide a tactical opportunity for tactical investors or traders, because the treasury gains will be shown in the current quarter or maybe the next one too, and there's this whole talk of recapitalization going on right now?
Right. So the thing is that we have seen that when there is a news of recapitalization of PSU banks, in the last time when we saw, I think it was 2017, the stocks went up by 50%, some of them doubled also, but it fizzled out very quickly. My sense is that the recapitalization is not necessarily a given thing, and we will have to see what the government does with respect to the reserve transfer that happens from RBI's book. It can utilize it for recapitalization of PSU banks. So up until now, the government has actually given all the capital that they had committed for. So if there is an additional, so last time, if you recall, the package was about 2.1 lakh crores. So if the government decides to give furthermore, then possibly it will be a constructive thing, because it will enable them to actually grow. But also, it is also possible that government utilizes that for general government spending. Then in that case, it might actually crowd out credit disbursement capability of the banking sector. So we don't know what the government will actually do. With respect to the fall in yields and the conversion of that into trading profit, of course, that is a positive from a fundamental standpoint. I think some of it is actually played out, and if you look at how SBI stock has actually behaved, possibly that's where things are reflected. But overall context in the banking sector, what has really happened is that there are private sector banks such as Axis Bank, ICICI Bank, etc., who have actually done phenomenally well, Kotak Mahindra Bank, for instance. And I think at the broader level, what is happening is that the problem with the NBFC sector has translated into a derating there, and there is a gain in business that is happening in the banking sector, especially for the private banks, and that's where the re-rating has happened. So if you look at the contribution of performance of Nifty, largely has been driven by banking sector. Second, I think, is the IT sector, and the oil and gas largely driven by Reliance. So I think there are few stocks which are driving up the index. But I think within the banking sector, SBI has also done well. Going forward, I think if there are surprises with respect to Fed decisions, or if the Fed doesn't really cut rates, and I think in the evening today there will be some statement, then it is quite possible that the fall in the yields that we have seen, especially for US 10-year, which has come down to something like 2%, if there is a bounce back from there, then I think there is a possibility of correction in some of the highly priced indices. So I think the trade that I would rather play right now would be more in favor of a weakening currency, which is IT will continue to outperform. I'll take off some money from the banking space.
What about some of the sectors like metals and auto? What's your sense there?
So the thing is, metals is a fairly narrow trade. If you look at last year till now, I mean, it has actually yo-yoed from positivity to negativity, etc. And I think it is largely to do with the trade conflict between US and China, and the news flow there has been positive and negative from time to time. And I think if you were in February, I think there was a good value there. I mean, Tata Steel, etc., had done well. And then suddenly, because that was happening in the context where people were considering that there was a negotiation between US and China that was happening, and the expectation was that there will be some resolution on the positive side. But then after a prolonged negotiation, it fizzled out, and then it became acrimonious. So these stocks actually corrected quite a bit. Now, yesterday there was some tweet by President Trump that it is moving in a positive way, and that is why you see the metal stocks doing well. So I think it's been a very narrow trade, and I think news flow on trade conflict will be a very important determining factor for how metal stocks would do. I mean, one can consider large names such as Tata Steel, for instance, or maybe JSW, but more preferably Tata Steel. But overall, it is going to be a very narrow range, because one doesn't know whether there is a finality as far as the negotiation is concerned. So I would say it's just a trading range, I would say, for the metal stocks.
Okay. Dhananjay, we spoke about the private sector banks and metals, the other stressed space. Private sector banks are not stressed, metals maybe partly, but the other stressed space, autos. And I want to specifically focus on the two-wheelers. We've discussed four-wheelers at length over the last 7 days with different people. Wonder if your research team and your strategy note has specific focus on two-wheelers and how they would do over the course of the next 12 months.
So as far as two-wheelers are concerned, I think it has undergone a very stressed scenario over the last, I would say, 8 to 9 months, and there has been decline in volume growth, all those things are there. I mean, a lot of it will depend on the ability of the government to stimulate the demand side, especially the rural side, and we have seen that because of the decline in tax revenue collection or significant shortage in tax revenue collection, that the government has actually sort of curtailed spending in development areas, also in the rural areas. So rural area spending has actually slowed, and I think that has affected the two-wheeler demand. Hero Motors, for instance, are underperformed because of that. The volume growth hasn't been coming that great. So I think you might actually be bottoming out, but I don't see a very quick reversal right away, because I think the budget is significantly constrained, because you can't the tax buoyancy is actually less than optimal. So gross tax revenue growth is somewhere in the region of 7 to 8%. Your GDP growth in nominal terms is shown to be growing at 11%. So the tax elasticity is significantly less than 1, and that is how you see that government's ability to exploit non-tax revenue or disinvestment and other things is very constant. So to sum it up, I would say that next year also the ability of the government to stimulate demand, while they would want to do that, it will be fairly limited. So I think in two-wheeler space there might be some bottoming out, but I don't see a stupendous growth going forward in the near term.
Okay, Dhananjay, we leave it at that. Many thanks for joining us today and giving us your perspective.